doing like a Nile River cruise. I don't know, like if you've ever seen that. It's freaking awesome. Like
No, I haven't.
Luxor, Aswan. Dude, I'm telling you, look it up. It's like
I,
one of those things that you like. Me and the wife love cruises, so that, and I think some of the fjords in
I
Norway.
love
That's gonna be
cruises
another one.
too. If you invite me, I
Yeah.
might join you too.
Okay,
me too.
come through, man.
I've only been on one, and it was one of the most fun vacations that I've ever had.
Yeah.
Where did you guys go? Where'd you go?
What? So me and a bunch of our friends, we went to this place called Coco Cay. It was through Royal Caribbean, so they have like a private island there, bro. Like this is before everyone had kids. We got smashed, dude. Like we were just drinking like crazy, like
You
because
can't
we got.
not. Like that's their goal is to just have you shit faced the whole
Well, the
time.
thing is, we had these things like the drink passes. Originally, me and the wife,
Yeah.
we were like, "Yeah, we probably won't need the drink passes. We'll just have a couple of drinks here and there." And our friends were just like really like they were gonna make it work. I know the cruise lines definitely lost money because we all just drank like crazy. One of my friends, Natasha, she was like we were afraid that they were probably not gonna let her back on the cruise. That's how drunk she was. So it was awesome though.
She
We had
was
a
one of
great time.
those. She was one of those.
Yeah. If you ever go to like, by the way, if you ever go to like the Caribbean and you go to the beach, do not drink the fucking like the liquor that they have on the beach. Like they make some fucking weird concoction, right? And they're like trying to sell it to you in like a coconut and make it fancy, but it's just all sorts of fucking crazy rum. I think it nearly like
And it's
killed
like
my friends.
it's well alcohol. It's like this
Yeah,
bad alcohol. Gives you the headache.
yeah.
I did one. Yeah, I forgot what it was in the Caribbean, but I got to be on it's the third considered like the third nicest beach in the world, the one where the sand is so fine it feels like a liquid.
Hmm.
And it's a weird sensation, a solid like feeling like a liquid. And then I did another one when I was in Jamaica or something, and they same thing happened to me. I used my credit card and they stole my number. I got
Yeah,
hacked. Yeah, the guy on the beach. They said don't do it.
yeah.
Yeah, all cash. All cash.
Yeah, but we just couldn't. You had to this one place. You had to give your credit card. And what they did was they were smart. They waited 6 months.
Mm-hmm.
So
So that
they
you
had
wouldn't
my
know.
card for 6 months, and then they waited. Then I started seeing charges coming. I'm like, where is this place? And like you look it up, and you're like, oh my god, it's the island that we were on like 6 months ago. Negril,
Yeah.
Jamaica. No, it wasn't Negril. It was Ocho. What's the one? Ocho something in Jamaica. That one.
Chris, you said you went to Denial in Egypt.
No,
What?
no.
This guy's worldly.
Dude, how do you have so many dad jokes, dude? I don't get it. You're
No,
like,
no,
you're
I
like
didn't even make the
25.
joke yet. Bro,
No,
I
no,
wanted
no.
you to be like,
What's-
yes. And I'm like, okay, so in life, whenever you're feeling down, just remember denial is only a river in Egypt. I was gonna
Okay.
Forget it.
Okay. Didn't land.
Anyway, welcome to Finance Junkies, 83 people. Thank
You want to turn on the mic, expert?
Oh, did I fuck up the mic? Hold on.
Freaking guy. He's
Did you
only
get
been
moderator.
there
Did
for
you
2
get one of
years
these, Amit?
Oh, the
you get
mic
one of
should be
these?
good, bro. The mic should be fine. Yeah, no, I didn't. It's not working with this computer. It connects to my laptop. That's why I'm not using it right now. I have it. It should be better. Should be decent.
Ocho Rios, yeah. Futtbucker. Yeah, it was Ocho Rios.
So I learned
Right
I
up
learned
my
from
ass.
my producer wife that Futtbucker is a firefighter. Is that true?
Yeah.
I mean,
Yeah,
you can
that's
look at
right.
his profile
Apparently, my
picture.
producer wife is scoping you out, just so you know.
He's
Yo,
the
I think
middle,
Futtbucker is
he's the
taking
middle one in the
everyone's girl.
profile picture.
I'm like, all right, I can't. Well, Futtbucker. I mean, what do they call you at the station?
Probably Futtbucker. That's probably why they call him that.
No, there's no way. There's no way his firefighter.
No,
friends
I
call
want to
him
know
that.
what your fireman name is.
It's like, hey, Futtbucker, get your ass over here. We got to put out this fire. You know.
And where are you fireman in New York somewhere? Because I've shot with
Long
some of the like Rescue One. I shot with a couple of those rescue crews and some fire guys, and we did a TV pilot, which was pretty cool, chasing them around.
I think it's either Nassau or Suffolk County. I think Nassau County, but yeah.
So how was your guys' weekend? Let's go around the horn. One thing you want to say that you did this weekend or that you thought about this weekend? Anything this weekend that you did? I had some family come over from India this weekend, so we were entertaining some guests. So that was my weekend. Vitaly, anything with you?
Working on some real estate stuff.
Okay. Real estate. Cool. Carlos, anything fun you did over the weekend?
I showed you before we went live.
That's true. You did show us your edit.
Like literally, I just get a pile of video on one end of the screen, and I'm a wood chipper.
Okay.
Yeah, you guys know I've just been deep diving into Truist. You know, I was like, I spent a good like 4 or 5 days like on my off time just doing as much research as I could on it and just trying to understand like how these regional banks all are impacted. But then
You're
like
just, but you're really just gonna pivot like that and not even tell us. What
He just
Huh?
you're not even gonna tell us what the score was at bowling, bro.
Right.
Oh, dude, it was terrible.
Did
The
he
only
get-
per
Did he
the
get
only-
to Weight Watchers yet? I want to know.
No, dude, I really, I was terrible. Like you guys, before this, we had a meeting, and then these guys were like, "Oh, you should do a video," and I already knew, like, bro.
No,
I'm
hold on.
terrible at
You're not
bowling.
explaining correctly. We were on. Carlos said, "Hey, you should in the bowling place take a video of you bowling and be like, oh, I'll buy a Palantir if it hits my strike price." And
No,
Carlos
bro,
was like, "Oh, it's gonna go viral," and I was like, "I'm gonna retweet it. It's gonna go well." And
Yeah.
you didn't do it. That's
So
Dude.
did you not? Did you like?
I think I had like
butterball the whole time.
I pretty much the only person I beat, like, because we all played in the same lane, was my mother-in-law, who's like 64. So everyone else just won. No, I was.
You showed her
I'm
who's
terrible at
boss.
bowling. Pretty much.
Right, elderly
Right.
abuse
I mean,
right here,
And she's
man.
like, she
On
was
camera.
bowling like like you walk up to the line and then you like toss the ball.
Yeah,
That was
kind of
her.
thing.
Me, I'm like trying to like bowl correctly and everything. It's just like going, oh my god, whoa, no. And just, so I'm terrible at bowling. Yeah.
I miss Wii
Chris, are you
bowling.
I mean,
drinking
who's actually
alcohol?
great at bowling? Like, who here, and even in the comments, whoever scored a 300, that would be really impressive.
300 is damn.
That
near
is impossible. Forget even
It's really-
270. Just
I
really
think
hard.
I might have. I think my highest was like 180 in real life. And Wii bowling, I got the turkeys. I was all turkeyed up. But
In Wii bowling, I rocked it.
yeah, in Wii bowling, I was an expert. But in real life, it's hard.
No,
One of
it's
my
pretty hard.
one of my buddies was like a professional when we were in high school. His name was Paul Stein. Dude, like, you could tell because they all come with their custom balls, right? And their custom shoes. It's like, yeah, you belong to a fucking league.
Or
That's
or
what
their
it
own
is.
glove.
Man, the
if they
Jews
come
are
with the
good at
glove.
everything, I can tell. Even bowling. This is
Allie
good.
can make that joke. but
I can
Allie
make that joke,
it.
baby. I had a bar mitzvah.
My hot take is that bowling's not a real sport, but that's just my hot take. It's
You have to qualify that.
You can still make money bowling, so it's a real sport.
no, it's kind of like golf to me. It's like
You know
there's
what's not a real
really-
sport? Horses. Can't make any money.
That's also not a real sport. That's
for
true.
producer.
Horse
wives
race,
out there.
horse racing. There's a ton of money you can make on betting.
No,
on horses.
yeah, you can make money, but I'm like, it's not a
She's
sport.
gonna kill me.
Like debate is more of a sport than bowling, bro. Debate, people sweat. Like
That's not a real sport. Nobody. Makes
it
money
is a real. It's an
doing that.
intellectual sport. It's an incredibly big sport.
I know, but no, you can't make $1 doing that.
So
That's
I think
true.
I think people have figured out what we did on Friday. Because
Yeah,
everyone's
people definitely
been
figured out.
everyone was messaging me like, "Did you do this?" And I'm like,
What'd you do
Wait,
Friday?
let me. I'm
Yesterday?
not gonna explain exactly what we did, but let me do a setup and then we'll.
Oh,
transition
SLG. I think I saw
Yeah.
a tweet. I saw a tweet.
Yeah.
Well,
Oh, wait,
yeah, we're gonna
SLG,
get into
talking about
crypto
the
right
TFC.
That was an in-depth tweet thread he had on Truist. I gotta say, I'm impressed.
yeah.
That is
Yeah.
some deep
Okay,
dive,
thank
double
you.
D.
So this story starts out on Thursday night, right after the pod. We're just in the WhatsApp, we're talking, and Vitaly ends up going to sleep. But me and Chris, I think Carlos even gets to sleep by like maybe 1 a.m., 1:30. Me and Chris are up till 4 a.m. discussing Truist. Okay. And Chris is trying to give us the bull case, but like obviously it's through text. He can't do that much. But we're going back and forth. And eventually he's like, look, this is the options play I'm doing. And I was like, I want to do it, bro. And so we talked through everything. I'm not going to say exactly what it is. We'll get into that later. But at Friday, 9:30, I've never done a very, for me, big options play. And so I'm at 9:30, I'm trying to execute the trade and then go back to my morning stream. And I try to do it and everything changes. The premium changes, blah, 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 all these. And I'm just like, what?
The
This is not
bid, yeah, the bid.
at 4 a.m.
shot
we
the fuck
discussed we
up.
were going to pay this much, and now it's this much, and now Robinhood's not accepting the fucking contract. And so I'm stressing out live, and everyone's like, what are you doing? And I don't want to tell everyone what I'm doing live because I don't want to be this degenerate options gambler, which is kind of what I was
You
doing.
Right,
technically
like, I don't want
are
to tell everyone I'm
because
selling Palantir.
Dude, I
You're
created
on a live
a
I
stream.
don't
monster.
want to tell them I'm dumping my Palantir.
I want them
No,
to-
but
created a
he's on a
monster.
live stream, degeneratively gambling.
Bro, at least he understands. Dude, I thought I created a monster because he's like, should I buy more? This looks like great. Should I buy
No,
more?
no,
And I was
no,
like,
you
whoa,
shouldn't.
hold on. You got enough
I want to
contracts.
sell
Relax
naked
there,
puts
buddy.
on Apple.
But in general, I'm not an options expert, but I think the bull thesis and a lot of it makes sense. And at the end of the day, we'll see if Chris is right on this because he introduced it. But let's get into it. Chris, you put out a thread today, and I want to break down that thread with you as you break it down. And this is your new finding. I had a nice lengthy call with our finance junkies about TFC. While some people think it is just a regional bank that might get hit with massive withdrawals, I would disagree. You've done a lot of due diligence. As I did due diligence, I found the opportunities. You've opportunistically reduced some of your exposure to SLG, which you still think will do well, but you plowed a significant amount of capital to TFC, and you think the markets will eventually wake up. TFC was up 9%, by the way, on Friday, which is kind of what fucked our like option strategy, because like the market kind of recognized some stuff that was going on. All right, Chris, before we get into it, any like macro thoughts, and then we'll get into the actual thread of the due diligence.
So I think a lot of people are expecting this banking crisis to be very similar to 2008, where generally there was overexposure to bad credit, right? So basically everyone's making terrible loans, and people had to pay for it. You know, essentially these loans would default, and then someone had to hold the bag on them. On the other hand, this time around, the problem is the interest rate risk that you have with a lot of these banks. So basically, the money that was lent out 2 years ago, 3 years ago, when inflation was non-existent, were done at really, really good interest rates for the consumer, but terrible for the banks in terms of risk. I mean, imagine right now someone told you, "Hey, I'll give you a 2.75% mortgage for 30 years." Like, that is crazy, because at any time inflation could come and then devastate the underlying mortgage. So the banks that are holding these mortgages are in a really bad position. Now, the question that I had was, okay, who's going to be the main beneficiary of all of this stuff? Is everything justified that's happening? At the end of the day, these things are just mortgages. As long as they hold them to maturity, it's fine. Now, if you're a bank and you need to get with like liquidity, because let's say you have a bank run, then problems really start. So if you have a very well diversified income stream, you have enough liquidity, even if you made some of these loans out there and they're sitting on your books where, you know, you're not getting as much net interest income, you can just chill, because you have other sources of income coming in that can counteract that, right? So yeah, you'll take an earnings hit, but you won't like go insolvent. And I think that's one of the main problems that I'm seeing with a lot of companies, where everyone thinks every single bank is insolvent, and everyone is going out of the going to basically go out of business. Some of them definitely are going to go out of business. I can't even say honestly who that's going to be, because I haven't dug deep into every single bank. But I can tell you, one of the areas to look for is exposure to commercial credit. So, I mean, you've seen it on CNBC and every single talking head. Buffett, I think, mentioned it a couple of times during the Berkshire call. Commercial office buildings, you know, they were probably the hardest hit after COVID, because there's a clear definition between the types of buildings that people are willing to go back to work to, and then work from home is counteracting a lot of people going back to the office. So if you have like a class B and class C building, these are like really old buildings that are like old school, kind of still like cubicles everywhere. You know, companies are not getting, like, the companies that own the buildings are not getting a lot of leases. So a lot of them are sitting vacant. If you go to like San Francisco, it's like a fucking ghost town there. Now,
So if you're a bank
for
right
different
now,
reasons, though.
if you're a bank right now, the two biggest issues is, one, this idea of a bank run, right? Which is like optical psychology, and it leads to massive fear, which is why the banks are down.
Yeah.
And then two is the exposure to commercial real estate that certain
Right.
banks have. And because work from home is not happening immediately, and these offices are still empty.
Before that, though, the main thesis was that the fear and panic in the banking sector is targeted, is about a few companies that have an outsized risk. But because of that, the entire sector is basically risk off, and people are selling out great companies that have great underlying fundamentals. And so Chris's whole thing was looking at the fundamentals of these companies. This one in particular, Truist, was one that's like, there should not have been a sell-off. Their underlying fundamentals are fine. The percentage of, or the spread of money that they have in the bank, right, is not as much at risk on a bank run. And even if they did have a bank run, they've got what, 100 and something billion in cash, and even if it's
liquidity, they've got 166 billion in liquidity.
So 2% a $2 billion hit would not have them go under. I think that was like the top level, and then we started going through and looking at
so let's start with this one, Chris. We can start with this tweet. Go ahead.
Yeah. So the company is very well diversified. So I think a lot of times people are thinking that if you compare this to like Silicon Valley Bank and First Republic, Silicon Valley Bank was just like it says, it's primarily in Silicon Valley. A lot of VC and hedge funds that deal with tech companies that are in their early growth stages, they would all use Silicon Valley Bank. Silicon Valley Bank did a lot of like white glove service where they would come to you, they would do all the closings with you, and people really liked that. They would do fast turnaround times on certain funding requests. So they had a very very good relationship with a lot of these tech companies. But they were kind of exposed to things because if there was a bank run, they had a lot of money, but very few clients. And so even a few clients pulling their money out could devastate them. And the other thing is they owned primarily treasuries. Treasuries by nature are very safe, very secure, but these guys, they ended up buying a lot of treasuries that were long duration. So what happens is if you have a treasury in the short term, and this is Jay Powell's fault, honestly, because Jay Powell raised the interest rates in the short term very quickly. That means that the long bond ended up taking a hit. So if you try to go into the market and sell like bonds that are yielding 1-2%, which what they ended up buying them initially at, then that means that those assets are underwater. And so you've got to give a significant discount, and a lot of those discounts ended up tanking the bank. So it was a very sad story because these banks actually did a really good job providing the services that they did to their clients, right? And the minute that there was panic in the markets, that's it. It was like everyone and their mother was pulling money out, and that's bad.
So let's answer that first question. Why would there not be a bank run on Truist? Why would it be harder for that to happen?
So there's three main arguments. Number one is, if you open that slide up, yeah. So if you go to the first thing, 55% of their total deposits are with small businesses. Okay, you think of your local dry cleaner, think of your local bar, your small businesses. These small businesses, first of all, they need to have a local bank presence because they need to, of course, transact in cash. So if you need to transact in cash, you can't say, oh, I'm going to go to a neobank that's paying 4% interest, right? Like, let's say I want to move my money to SoFi, but then what am I going to do when a customer comes to me and pays me in cash? Now I have to figure out how to move that money around. The other thing is these businesses have long-standing prior relationships with these banks. They like I spoke to my brother. My brother told me, like, yeah, I know my banker. Like, if I need anything, call up Mike from back then it was SunTrust, now it's Truist. And 2 seconds later, Mike could address whatever I need, whether it be liquidity, short term or long term. And I don't have to like go through a lot of crap. I don't have to go like try to prove myself. I actually have a person that I can speak to. So a lot of businesses, they still prefer to have a local retail bank provide those services for them, right? That's like one of the big benefits. And they're also not likely to pull all their money at the same time. The other thing is, if you look at the deposit amounts, it's like $17,000 average. So yes, I'm sure that some small business by 100,000, 200,000, but most of these are like really small businesses that are constantly paying themselves, paying employees. They already have checks out there with vendors. They have distributors that they have bank checks with. So these are things that, like, if you're a small business, you need that in-person relationship. And I think Vitaly was actually talking about that on our Discord, because you're a small business owner. So you see, like, there are certain things that you can do electronically, but especially if you're dealing with real estate, you need that like physical footprint. Do you have any comments on that, Vitaly?
Yeah, on our Discord, a lot of people were shitting on big banks. And they're like, oh, why would you ever do that? You're just going to go to a neo bank like SoFi and blah. I'm like, dude, if you actually do any business, have multiple accounts, have to talk to your banker, have to do wire transfers all the time, need to do loans for real estate, whatever, the 10,000 other things, need to get a credit line approved, multiple credit lines, different accounts. You're going to do this with SoFi? Go ahead and try to do that with SoFi. Impossible. So anyone who actually does real business will not go to a tiny bank, because the 4.5%, yes, that sounds great in theory, but they need all of those relationships if they're actually dealing with lots of money and different accounts and different funding. So I still see a place for big banks. It might not be the best investment for us. I'm not saying we should all invest in it, but SoFi is not taking over JPM's business anytime soon.
Yeah.
And
So
just to follow up on this point here from Chris, and then we'll keep going into that.
yeah.
This is Truist is the 7th largest bank by assets in the U.S. So not only is 55% a lot of these small businesses, these mom and pop liquor stores, bars, dry cleaners that are not going to go out of business overnight, and they're not going to put their money into SoFi, as Vitaly says. Chris, you said this qualifies them to be one of the too big to fail banks, meaning any stress on them would immediately prompt a regulatory response to protect the entire sector, which is what we saw Friday when the report came out. A rumor of a report came out that there may be a moratorium on shorting banks, which shot the stock up 10%. Can you speak to this and why this is also good for the bull case?
Yeah, so the argument that a lot of people are making, especially a lot of people who are trying to short the companies that are out there, everyone is looking for soft targets. And what they're doing is they're essentially looking at all the regional banks and saying, oh, Truist is a regional bank, short. This one's a regional bank, short. And so fundamentally, these businesses are strong, but if they get attacked by short trading, what ends up happening is that creates fear, and that fear can lead to depositors getting scared and pulling their money all at the same time. So you don't want that contagion risk to happen, and especially after Silicon Valley Bank and First Republic went into receivership with the FDIC. The banking systems like everything works on confidence in the banking system. So a lot of people, they're feeling like, oh, wait a second, like, could I possibly lose no one's lost their money, by the way. Like FDIC has covered pretty much everybody. Okay. But the thought and that fear of losing their money can reverberate into people making a lot of rash decisions. And so in order to protect that, the regulators, like this in 2008, this happened, where they actually put a moratorium on short selling, because this way the stock prices wouldn't get hammered and wouldn't give the false impression to the general public that this bank is about to fail. Because essentially, if you see your stock price go from $100 to $1, you are at that point, you're going to panic. You're going to be like, wait a second, I need to get my money out. Even if it's FDIC insured, you really want to deal with the FDIC to get your money out.
Well, you're saying you're saying if the stock price goes from $100 to $1, people are going to want to take their money out of the bank or out of the
bank run. He's saying a bank run.
Yeah.
Okay. No, I thought you meant like they'll want to sell out of the stock.
This is a curious thing though. What happens? Does anyone actually know? So let's say a bank goes under. How do you get your money out? How does the FDIC actually? What happens?
Well,
does anyone know this?
Up to $250,000 gets covered by the FDIC.
I know, but what is that?
So
it's usually the money, right? It's like
where does it go?
It's like the stimulus checks that came in, I would imagine.
No. So basically, they go into receivership. So basically, the bank runs like a normal bank. They keep running operations, but it's all governed by the FDIC. So the FDIC is the one that makes sure that up to $250,000 of your personal money is there. Anything above that, they won't cover it. Like
it's no longer a private business at that point, basically.
Yeah.
It's like a completion bond company when they take over a movie.
Yep. And then what ends up happening is anything above that amount, that 250 amount, ends up becoming an unsecured credit towards like you almost become a creditor to the estate, the bankruptcy estate that happens,
So I have a question. This is regarding SoFi then. So SoFi now is covering $2 million supposedly. So are you telling me when they go bankrupt this year, okay, that 2 million is basically going to be just covered? Like I can just go to SoFi.com and get my money out.
The mechanism that they're using this is that it's supposed to be that they're dividing up things with like 8 different banks and stuff. Like, I don't know how the exact system, how SoFi is doing this. I can't explain it. Really, I can't.
Well, I think it's like 12 banks. I think that's what it was. But I'm saying, can you just as simple as logging into your account and you have access to your funds because technically it's covered by the FDIC. So even if they
That's what happened, bro. People in Silicon Valley Bank, there's a startup I knew, they had like $14 million. And the day there was a bank run, he was like, I'm not taking my money. I respect Silicon Valley. Then the shit collapsed. And then he got his 14 million from the fucking FDIC,
I know what happened to the $250,000 max.
That's what I'm saying.
That went away.
Because the FDIC raised the limit. That's why they printed 300 billion, right? To make Roku and all these startups whole again.
What do you guys think about that? Just fundamentally.
I think it was a good decision.
I'm saying the idea that the government can say stop short selling on banks.
I think that's totally fine. Well, honestly, we don't want the system to collapse. Everyone wants a free market and the system to collapse. It's going to be so much worse when that happens for all of us. We don't want that. Like me and you don't want that. We'd rather get the depositors covered. You know what I mean?
Yeah.
Oh, sure. But I mean, they would just get bought up by larger banks, which is going to happen anyway.
Yeah, and
No,
the
I'm saying
thing
the
is,
depositors
yeah.
themselves, like Etsy had 250 billion or whatever laying around at Silicon Valley. Like we want the depositors covered because then that affects the whole system where they have to pay their employees, they have to pay for whatever contracts they have. Imagine that all
Sure,
goes
but
away.
they can make. I feel like they can make the depositors whole and still
Right.
allow people to short the stock. That's not the deposits.
He's asking, should you be able to short banks or not?
Yeah,
Like, if the
but
government,
then what happens is the whole thing starts to
the-
collapse, and they can't cover every single bank. That can't happen.
I mean, but do you get my point that like that's the point of a short sell is to
Yeah.
to make money when I'm not saying, you know, we don't like say morally, I don't believe in that. I try not to short companies, but if there's ever a time to, that's how you make money. That's what happened during
That's
COVID.
true.
How many companies failed during COVID?
Yeah, unfortunately,
Zero.
unfortunately, one of
Banks
the
no, but banks no, and banks
The
and car
airlines
companies.
didn't even fail during
Banks, car
COVID.
companies, and airlines.
Chamath was like, let him fail. And they were like, no. Oh, Chris, thanks for demonetizing the fucking stream now.
don't worry, it's
No,
not gonna
no,
be
no.
demonetized.
Man.
I promise you
It's
it'll be
not.
demonetized. But
No,
that's
it
okay.
won't. No, it
You
won't.
got to just stop it
Lance?
every 10 seconds or something.
You ever get tired of working for a living?
Every
Pause
damn
it.
day. But I've got a nasty addiction called money, so
Oh,
I
All right,
do
let's
what I
talk
do.
about that.
You?
Okay. What did you want to say?
We just to stop it because then the algorithm.
No, they're just fucking with you. Let him keep
Oh.
playing.
No. Never. Until today. You know, they call us traders gamblers. The world economy is just one big casino, fueled by a giant debt bubble and computer-driven derivatives. There's only one thing better than being a gambler in a casino.
That's being the house.
That is right. There's a systemized machine out there, sucking capital from localities and injecting it into the global markets where it can be used to speculate and manipulate. And if something goes wrong, there are bailouts and bail-ins, federal aid and easing, where the government doesn't hunt you down, but instead gives you a nice soft net to land in.
That's your
Okay.
answer to the
I think you
fireside
gotta
chat.
pause it now.
You want to
I,
become a bank.
we
Wanna
learned
become a
everything
bank.
from billions. That's what we learned about the banking.
No, but it's so true though. Like the way that he described it is exactly the mentality that the banks have gotten so used to now, which is, oh, we're so important to the general economy that we can take as much risk as possible, right? And the government is just going to bail us out anyway, and it's going to be fine. Like I think it would be delusional for us to think that bankers don't have this in the back of their brain where it's like, hey, there is no such thing as like risk for us, especially like if you are a systemically important bank, like you're a JP Morgan or you're like one of the top, your whole like fear of risking your company's existence is no longer there because you're like, yeah, you know what, the government's just going to come and bail us out. And so your risk threshold gets pushed further and further outside what you would normally
But it
consider.
also incentivizes them to
safe.
be a little reckless.
Yeah, and I think that's one of the problems, right? So this is where regulators have to kind of step in and say, you know what, we are going to make sure that you're not going to, like, here's an example of a rule that they created, but they violated themselves, right? Like
Who
now,
created
JP
the rule?
Morgan, huh?
Oh,
No, I'm
JPM?
saying, yeah, well, not JPM didn't create the rule. I'm saying like I forgot who created, the regulators for the banks created a rule that no one bank could own more than 10% of all the total deposits. Yet JP Morgan right now has more than 10% after taking over First Republic, right? So they let the rule that they created lapse because they did it like a special carve out saying, well, technically because they're participating in this rescue, it's okay. Let them take a larger. So right now, JP Morgan is sitting on a crap ton of assets and crap ton of money. You know,
I wonder why
and-
they didn't just split it between the big banks then. You know, like
Mhm.
you five, which are massive, or four, you guys have to take this over and split it up.
I'm not sure if that would have worked in terms of like structuring it, and then I'm not sure each bank would have wanted to do it that way, because then you have to like really like
Who gets
layer
what?
like who gets what, and it's a granular thing, and then you have to go through everything. So it's better if just one person takes it over. And so JP Morgan had the best deal, but dude, JP Morgan still got a sweetheart of a deal, man. It was like JP Morgan got all the assets, none of the risk, because the risk is coming from the government, right? They're the ones like footing the risk side of things. And yeah, and JP Morgan looks good. They have access to some of the wealthiest people in the country now, thanks to First Republic, because First Republic had a lot of rich people on their depositors list that had
So
like
Chris,
relationships with them.
let's
Yeah.
move back to this one now. Going back to Truist. So
Yeah.
net interest income. Why is this part of the bull case?
Okay, so net interest income first is just the spread that the banks make from issuing loans versus what they have sitting on their books as deposits. So when you lend a bank money, they don't just take the money and put it into like into like the vault, right? I think that's the perception that a lot of people have, that there's vaults all over the country where people just take the cash and put it. Most of it is in separate accounts that's then lent out to other things. So when you go and you get a car loan, you get a mortgage, you get a loan, like a personal loan, all of those things, the bank is charging you and then using some of that money to pay back to the depositors, to like the checking and the savings account. And they make money on the spread. So the thing is, the more important you are and the more stable you are, the less likely it is that you really have to pay a lot to get depositors to put money with you. So as an example, JP Morgan and Bank of America, they don't give you nearly the amount of money in your checking and savings that something like SoFi does. Why? Because there's a lot of clients that are like, hey, listen, I want to keep my money with someone safe. I want to keep them with someone who's providing me all these additional services, someone who already has my mortgages. So I'm going to keep my money with them. Like my wife right now, if I tell her like, hey, let's move our money to, I don't know, like some small bank, she's going to say no, like she doesn't want to risk it. So there's a lot of times people, businesses, they're going to want to keep their money with big reputable banks. And so when you're a big reputable bank, you automatically get access to cheap deposits, or cheaper deposits than something that's more smaller, and you can make a lot of money on the spread. So basically they lent, like if they lent out the money at let's say right now they issue a mortgage,
Can
like
you guys
at
go big?
7%.
Can you go
Huh?
big? Can you go
Yeah.
big so we could see?
Oh, yeah.
Yeah.
Slacking
So
a minute.
My bad. No, because we were explaining that slide. Go ahead,
Yeah.
Chris.
Yeah. So like let's say they lent out a mortgage for like 6.5, 7%, right? And they're paying the depositor 1 or 2%. They're making 4% on the spread. So that means that they're literally every month that you pay your mortgage, they're gonna get their money at a 6%, and they're only going to have to give to the checking and savings guy maybe 1% or 2% interest. So, like I said, all that money is just goes right back into profit for them. I mean, of course, some of it's used to like run daily operations and other things, but
Uh,
that's where banks are profitable.
I'm
That's where
actually
they
looking
make
at
money.
Truist's website just to see what rate they were paying. From 0 to 99, hold on, $1 billion. Their
Yep.
tier from 0 to 99 billion is 0.01% APY.
Right.
Mhm.
0 to
Wait,
99
to
billion.
99. So we need a
It literally
trillion.
says
We need
99,
so we need a
99,
trillion.
99.
All right, guys. So please start contributing with some super chats so we can hit that trillion and get to that next tier.
See,
I was
I'm
actually
someone.
looking up the insider
Yeah.
activity, bro, for like months. It's nothing but buys.
Yeah. Someone is saying this is boring. Bro, honestly, banking is
Dude, it's
one of
Johnny. He wants to hear about Enovix. Okay.
Yeah.
Well, no, but the
Hey,
question.
we
the
want to know
question
how
is-
does Enovix package up banking?
Well, the question is, what you're saying about the bank makes sense, but in this current environment that we're in, right? There was a trade that was made, and there's a reason why that trade was made, because you're sort of seeing how this is going to play out, right?
Mhm.
And I think
Well, why
that's
don't
the
we show a
part
chart?
that's the part that people.
Yeah.
Show a
That's the
chart
part
that
because
people
like
would,
even I looked at the chart. I was like, okay, there could be like a 2x here. So if you're talking about returns, 100% return is pretty good. Okay, people.
Right, and
So
that's the
100
part that I think would give them that.
Can you
that
pull up the
value
chart,
on it.
Vitaly?
Yeah,
And
let me
put
get
it-
it.
and
up.
put in
Hold on.
the fancy lines. And while you're doing that, let's do one last piece of DD.
Yeah.
Chris, the insurance business. Can you explain why you think this
the
is
ticker
Well,
again,
one last thing,
FTC.
everybody hit like and subscribe. At Futtbucker, if
TFC.
hit like,
Yeah.
hit subscribe.
So Truist also has a significant insurance business where they actually provide insurance services to a lot of the small businesses and to other things. That business generates them income, right? And what happens is, think of it as when you pay your premium, right? That goes to the insurance company. The insurance company doesn't just take that money and just sit around with it. What they do is they actually take it, invest it, get a return on that money, right? Because they are going to be able to make more money using your own money. Now, with depositors can pull their money at any time. Like you can go and you say, oh, you know what? I don't want to keep my money with these guys. Pull the money, boom, gone. With insurance companies, you're literally waiting on something bad to happen to pay out the insurance, right? So everyone is paying their premiums And the bank, I mean, or the insurance company doesn't necessarily have to worry about huge withdrawals. So if you look at something like Berkshire Hathaway does that. They have Geico. So Geico, when you pay your insurance premiums to Geico, they keep some of it to pay out, accidents and everything else, but there's extra capital that's coming in that they use to invest in other things and to grow the pot that's available. And so this way it gives Warren Buffett this extra cash flow that's like free money to them to do stuff with. So
and so you're saying Truist has a business that is
look at how much money they make per quarter on that.
So how do you see this playing out, say, in the next year?
So I see this going back to the mean that it was range bound with. So a lot of banks, they have a set PE.
Bring up the chart, because what are we looking at? We're looking at prices that we haven't seen in 2 years.
Yeah. So what typically happens is banks trade within a certain range and they stay there. Most of the times, the money that you're going to get from a bank is going to be in the form of dividends, right? So capital appreciation isn't necessarily 100% the goal. A lot of it is just dividend income. So if you bought Truist right now, you get a nice 8% dividend based on today's prices. And the dividend is more than covered by its net income when you consider the non-interest income and then also the net interest income. So both of those combined, you still have really good coverage, and their dividend is constantly growing. That's the other great thing too. So when you hold a dividend stock for a very long period of time, it's not just, oh yeah, the dividend I got in 2010 is going to remain the same. The dividend increases over time as the profits keep building and building and building. So right now, I think it's 52 cents a quarter. So at $29 a share, you're looking at close to an 8% return just on today.
So
right?
I just put this up, by the way. This is the dividend history over time, so you can see it. From basically, they pretty much do grow it over time. I don't know if it's safe because this is over 10 years and it's gone up. So once again, I don't think you get rich with banks, but if that's what everybody's looking at.
Well,
but
see, the thing with
it's
banks
consistent.
is that if you get in at the right time, banks can be amazing. So that's the key right there. So if you just try to buy banks at a time when they're flat, they're just valued normally like they're supposed to be valued at, then you're not really going to make too much money. But if you get into a bank when everyone is scared of it, like let's say you got in 2009 when everything was like, oh my God, the world is falling apart. What was the price of the stock then? At the bottom of 2008.
Well, look at this. Let me just point out. Look, I'm not a big banker, and I have not invested in this. But just looking at the chart, you're closer to the bottom than you are the top. If you were to look where it spends its time, the range is roughly from $21 to maybe $54. And if it gets somewhere around 38-ish, you should probably be out of it. The other thing to point out, the RSI, this is the monthly, by the way. So the RSI in the monthly is pretty much dead. And look what happens. Here was the monthly too. It pumped. This right here, this was back in March 2020. It fell all the way down. And then if the RSI dropped somewhere around here, it looks like too, also pumped. So it looks like you have a pump coming up.
Right.
We haven't got to this price since April 2020.
I mean, look, there's a pump coming sometime,
like a month
sometime in the future.
Yeah. So the thing is, in my thesis right now is that eventually when everything starts to calm down, people are not scared anymore. It'll revert back to its mean trading value again. So I would think that it goes back to between $45 and $55, like at the low end.
I don't know if I would wait that long, honestly. The $39 seems like you've made a good return.
No, but Vitaly, look at the chart. It stayed at 45 for the past 5 years, 45 to 55.
Yeah.
The one time it went down below to that 30 level you're talking about, a little bit below that, was COVID. And then once it shot up by November 2020, it was stuck from 45.
Yeah, okay.
I also been saying, I think we're about to see the rotation from growth to value. Like next week, I'm saying like we got another week.
This is value though. This is value.
That's his point.
Right. That's what I'm saying. That's my point.
Oh, from growth back to value?
From growth to value. Because this is kind of what happens every summer. People go into the value stocks, or at least it seems to me that we go into the value stocks. And then somewhere in September, October, when it's after whatever's Labor Day, then people are back in actively trading, right? So it's like a safe place to park your money. So that's why the timing of this could be really good. That's just what I'm thinking.
And even if you held, you're getting a nice
Arlie,
8%.
too much risk. Yeah. Hold on, too much risk. This I don't understand these people. Too much risk with little return. If you get to double your money in like a month or two, how is this little return. First of all, maybe there's risk. I'm not saying there's not,
Yeah.
but 100% upside. I'm not. First of all, I don't want to like rush into this trade, but like 100% upside. Like, is this bad?
That's pretty
Yeah.
good to me.
Is this not
And-
SoFi good?
And even if you just held and it stayed flat for a year or two, you're still getting a nice 8-9% return on dividends. Like, that's another great thing too, that you can't, like, imagine right now you're holding a stock and it stays flat for a very long period of time, but has no dividends or anything like that. I mean, that hurts, right? This, at least you know you're getting a dividend that's well covered by its non-interest income and also its other business segments, its exposure to the areas that are contagious right now, that have weakness. They don't have that much exposure to it. So I think
Chris,
this is
when we looked at the 10Q and you sell in the 10Q, the public 10Q, if you sell off all their assets outside of their other producing income operations, the fair value of the stock is $40.15.
Yeah. So that's called the book value, right?
Well,
the
didn't
book
I say
value,
at around $40 you should probably be out of it? Like, that seems right.
Yeah, but that's the book value. That's like discounting the business value and everything else that happens to it. Like, remember, these are still money making operations, right? You're not just saying, if you think of a company and you're saying, yeah, you know what, every company should be trading at book value, you're going to see that there's a lot of businesses.
No,
that
I
don't
agree.
work
But
like
okay,
that.
so right now, let's say it's trading in the 20s, or it goes down because it was a big day Friday. It goes down Monday and Tuesday and Wednesday, and we're back at $25 or something. Then when it goes up to $40, you've almost doubled your money. Not exactly, whatever, close enough, 80%, 70%. Then after that, the next $5-10 is just not the same return anymore as you just got. So it might not be worth holding if you're in it for a short-term thing, right?
It
So
depends
might
if you did a certain option strategy as well, and there's strike prices, right?
No.
So
If you go up to $40, if you did an option strategy, let's hypothetically say between the $30 strike call and the 45 call, like between there, anytime you're in profit after you spent your premium, you paid $2.50 or $3.80, hypothetically speaking, $3.80.
Yes, but hypothetically speaking, if you did
after it goes $30,
then the decay on the top one, if you just wait
you have
longer,
you have 2 year options. These are leaps. So if it goes from $30 to $34, right? Then that's when you recouped all your losses or whatever. After that, it's all gravy. So if it's at $40, you don't need to be waiting till the end of expiration. You should just take your profits and move on.
So you don't need to, but you're not looking. There's a limit to how much you can make, because
it's the difference. So
it depends if you did that.
But you've doubled your money. You understand? If you paid around $3-4 and it goes to like the $40, that 40 minus the 30 is $10 minus the 3 and change you paid. So that's $7. You've only paid 3. You're 200% in profit.
Oh yeah. You're good, because hypothetically speaking, hypothetically speaking, the premiums cancel each other out.
No, but the premium is counted, right? You subtract that. So I'm saying you don't need to pay for the $45.
You subtract it on one end and you add it on the other. Hypothetically speaking.
All right. Anyway,
you ring the bell every time you say hypothetically speaking.
Yeah. No, well, and one last thing I just want to address, because I think someone's saying SLG is dead now. Like, no, SLG is not dead.
Well, Chris killed SLG. That's
no.
Chris all of his
SLG.
followers
shorted it to
guys. This is why you don't follow YouTubers. This YouTuber just changed his mind 3 seconds later, and you're like, "Fuck, I'm still in this trade."
Okay, so SLG. No. Hold on. The bull case for SLG is still there.
Chris was gone a week ago. Okay,
but in the short term, right now, if I see value where I can do an easy double that's much safer, I think SLG is a turnaround play. Like, people are going to be going back to the offices, especially Class A buildings. They're occupied. They're occupied 90% plus right now. They're going to do very well over the next 5 years.
But
right?
I told you that. I said you have to wait the multiple years for that to hit while you get paid a dividend.
Chris is like that, like Robert De Niro in Heat, when he says, like, never make an investment that you can't turn your back on in 30 seconds if you see the heat coming in. You know, it's like, I could be all into it, but if he sees an opportunity somewhere else, he's going to.
Now the thing is with SLG, you're still going to be making money from the dividends, and it's still going to slowly grow. See, when I looked at SLG as a investment opportunity in one of my dividend portfolios, my calculation wasn't that, hey, Truist was going to go straight, like, mispriced, like crazy mispriced like this. So as things change, I change with it. If I see opportunity come my way, I'm going to change with it. I'm not just going to stay, well, you know what, I had a thesis, I'm just going to stick with it. My goal right now is if I buy Truist, it doubles, I have double the amount of money that I can use next year to buy a shit ton of SLG and actually make even
Dude,
more.
he's
return
not
in the
buying
future.
SLG again. Just
No,
By the way,
I am.
SLG is not dead money. There's a fucking 15% dividend a month on that.
That's
So
scary.
the
By
other
the
thing.
way, chasing dividend yield, and maybe we go to this topic which we're
No,
talking
no,
about.
it's,
in
but
our
but
group.
it's not about chasing dividend yield. We
It
already
is.
heard the bull case 17 times from Chris. The question's now, is it worth holding? So if the stock's stuck at 20 or 22 or whatever, and by the way, it ran up to 26. Like
They lowered their dividend. They might lower it again, but in the
13%,
meantime,
12%. Like what others? There's not that many stocks
2%.
giving that much.
I mean, you don't know. No, these
Yeah.
companies they can go to 0% if they need the money, and they're in
But that's
trouble.
that's where the thesis comes in.
So that's where Vitaly.
Yeah,
remember,
and you can't put a stop. You can't put a stop loss on the dividend cut.
right. And but the other thing is, remember,
You should be
Vitaly,
able
this
to.
is-
You know what?
Imagine you
You
could.
should
You're like,
be
yo,
able
if these
to.
motherfuckers lower that would be.
Real quick, Chris, before you go, this
Yeah,
is
with
exactly what Fut's saying. If Tesla tanked to 50, I'd sell everything gold. That's basically what Chris is saying, right?
Yeah, yeah, exactly. Like if you
Yeah,
see,
yeah, no, it could, yeah.
if you see a company, like you can have a bull thesis about one company, and if something fundamentally changes where another company is very undervalued, you need to
Right.
take some of that liquidity and move it to the thing that has more opportunity. Like I sold some of the stuff that I have a lot of bullishness on to buy Meta because I saw Meta was so undervalued at the time, and now I made a shit ton of money in Meta. And guess what I did? I took my money out of
How
Meta
much?
and disposed it.
How much Meta are you holding now? Any shares?
I still have maybe some shares here, maybe like 1,000 shares, but nothing more than
That's a lot of
that. I don't.
shares.
I sold all my contracts though. I'm done.
Right.
That's
So,
a big position
well, that's-
if you
well,
actually
that's
have
the
that
point.
many shares.
yeah, I do. It's in my nice
yes.
little retirement account.
I know, but
So,
when you said you sold out, because like I did not sell my shares.
Yeah.
And in fact, I think you have more Meta than I do. You're more bullish than me, apparently. But
Well,
I have not.
No,
sold
he's just
my
more
shares.
richer
Yeah.
than you. That's the difference.
That's possible because he 20x'd on SLG and he's out.
No, Vitaly, because you're still bullish on this metaverse nonsense, and that's why you're still in it for some reason. But outside of that,
I
I'm
still
in it.
think that.
I
Yeah,
still think Meta has at least a double before I leave.
I think Meta still
What,
has
what would the
some
market?
time to
What would
go.
that put the market cap of Meta at?
Over $1 trillion.
Yeah.
Man,
guys,
I-
I totally forgot timestamps today. But
I'm
we only
so-
talked about one
yeah.
stock today, so that's it.
Well, but I
Mitt's
let-
area. He's trying to get ready. For
I don't know if you want to end with
Palantir
this.
earnings.
I did want to talk about Carl Icahn. Once again, who knows if the audience is bored with Carl Icahn, but me and Chris are having a good discussion because what did I see? The plain bagel video? That was really informative about the short seller. Because usually I don't follow short sellers. Most of them are just like, I think, just full of it because they have their own agenda, of course. But the fact that Carl Icahn has not been paying himself and his son, and they own 80% of the float, right? Somewhere around there.
80. I think almost 88% now.
Okay, 88% of the float, and they don't pay themselves in the dividends. They actually don't take the dividends. They take shares instead, diluting shareholders, while only paying out like the 12% of the float. That's a little weird, isn't it? Anyone? There's other things, but that's the first thing that I found incredibly weird.
You thought that gives credence to Hindenburg's report, or it doesn't give
No,
credence?
it gives Hindenburg's report a lot of credence that there's a lot of red flags with Carl Icahn's company. And I was going to invest in Carl Icahn when he was under the 30s, but I got busy that day and it shot up to like 38. So I was like, okay. So I missed Carl Icahn's thing, but now I'm glad I don't even want to mess with it because it seems like he might have an issue at his company that's legitimate as opposed to just a short seller.
I spoke to a friend who I told you guys was works with wealth management and private clients, right? Because remember, these guys, when they're uber wealthy, they have mechanisms which they can do stuff. And I think someone in the chat actually just put it up there. Carl Icahn is taking advantage of a tax loophole, and that's what sometimes it could be. The other thing is
but that's diluting the shareholders at the same time he does that.
Yes and no, but remember, you're getting paid in a cash dividend, right? So you're getting $2 from it. As long as the price stays stable, there's nothing.
That's not how it works.
I'm a little bit leery on that. I think if the stock price is able to maintain itself, you're not really diluting shareholders. I mean, yes, well, all right. I'm not going to go too much into it because I think it's the structure is a little bit more complicated than someone like me can analyze. I think someone who's got like a background in forensic accounting and tax law, especially corporate tax law, could probably address this way better than we can.
Okay, what about the companies he bought then? He was buying companies, let's say for what was it, $1 million or something, and then marks it up 900% to 9 million or 90. I forgot what it was, the exact numbers, but he gets to put some sort of other value for the company he bought. And usually it's supposed to be a discount and not a 9x increase in the value of the company, therefore increasing his market cap way higher than it probably should be.
So the book value, that's what it was. The book value of
Yeah.
IEP is double that of the
2.2.
actual
Right.
of the actual NAV, right? So I mean the market cap is double the NAV. So most of the time you have these close-end funds, they trade at NAV or maybe a little bit below. So a lot of a lot of the stuff that they were saying about IEP is that they're trading way above NAV. That's like a red flag. But once again, I think that that's a more of a structural thing with how he does the operations. Like the argument that I'm hearing from the other side is that this is just how bankruptcy works. A lot of the businesses that he gets into, he runs it as an activist, right? And I think I'll show you, and we'll put up a clip of how Icahn makes his money in turning around businesses and how he exactly values things on the books so that you don't have to necessarily pay as much tax. So let's just take a look. 1 second.
Okay, well, you can
Yeah.
bring that up, but that was
Yeah.
only one example. The other example is that he actually has businesses that he's been in for 20, 30 years. We should play that video too. You sent the link to. That's a great video of Carl Icahn, the way he does handle business. He's good on it. But so the businesses he was running for a long time, he still ups their value even beyond book value, right? So I forgot which car parts company he runs, but it had something like a 60, 70, $80 billion value, and he
Wasn't it
increased-
AutoZone?
I think
I'm not sure if it
O'Reilly
was-
or something. I'm not
Oh,
sure.
I'm not sure. I'm
O'Reilly.
not sure which one, but he basically increases the market
Aggressively
cap.
aggressively books it. Yeah.
Yeah, even though it's a publicly traded company and there's a certain market cap, he still on his books puts it at 4 times the value or 5
Well,
times
he's an
the value.
activist investor. He does that.
No,
crazy
this
shit.
is already a business that's been running for a long time. This is not the same thing as him buying a crappy business. This is something he's already fixed technically.
I would say once again, this is something that you really need someone who's like a forensic accountant to deal with and let them explain it to us rather than us trying to quarterback it and figure it out. To me, this is a trade. I'll be honest with you guys. I saw this. I know Carl Icahn. Carl Icahn is not the type
Personally?
of guy that's gonna. No, I'm just saying, like as an investor, he's not gonna let a short report like this just devastate his business, especially when most of his net worth is tied into it.
Oh,
He
yeah.
has access to liquidity that we'll never have access to, so he can break the shorts very quickly. So right now, you saw that it was up almost 25-30% from the time, like 28, 29. It's like you don't want to fuck around with a guy like this. He's got access to liquidity. He's got friends in high places, and he can move money around and fuck shorts up very quickly. You know, so
I would like to
that's
see that though. That would be a nice little fireworks to watch Hindenburg go down a bit. Unless they sold out already.
Well, my suspicion was that Hindenburg did that already. Because like, why would you want to wait around to take your profits when you've already done the damage? You know,
Right.
So let's put this up.
This video is great. It has nothing to do with the short, but the way he treats companies.
Yeah.
Yeah.
You're going after AIG. We can talk about it. But one of the things you want to do is break that company up. I assume that you want to own that company only for the period of which it would be that it would get broken up and then you'd want to leave, no?
Not necessarily, sometimes, a lot of times. But you talk about activists, let's go for the first one. I still own it, 31 years, ACF. But let me tell you a little story about ACF. I don't mind, you can listen a few minutes, have your drinks a few minutes later. I'll tell you the fast little story here. So I was a kid, 31 years ago compared to today. And I see this ACF and I'm a workaholic and I'm working on companies. I see this company sells for $30. And I'm looking at the rail cars they own and I look at all the stuff that they got. They don't make any money. And I look at I'm an old gray and Madad guy. I still am. And you look and say, this is so cheap. So I take all the money I made. By that time I had a fair amount of money. I mean, nothing like today, I guess, but enough to, put in 400 or 500 million or borrow it or whatever I did. And I bought a lot of the stock. So now we're going in and we're saying, this is so cheap. It's $30 and they got all these assets. They're not making any money, but what the hell? So I finally get control of the company. I get the company. And now I go in and, I'm a good math guy. I don't believe in micromanaging. So I meet the CEO and he said, oh, Mr. Icahn, we'd love to have you. I mean, after a bit of fight, we still love to have you aboard, boom, boom, boom. I said, great, let's be friends. So they manufactured rail cars. I won't bore you with the details, but they had a lot of companies. And in the rail car business, the secret is very simple, that you make rail cars, but the government wants to incentivize you. So the government says, okay, in other words, you can depreciate the rail car over 5, 6, 7 years, but you can keep it for 40 years. So you get this great depreciation. So it's great tax incentive.
So
One of the one of the things I really like about what he just said is depreciation. I never understood and weighed in how depreciation actually works. So sometimes I would look at a company and be like, oh man, their net income negative. That means that they're not making money. This company is going to go bankrupt eventually. And it was stupid. That thinking is wrong, because when you go to the cash flow statement and you look at depreciation, you add back stuff that's depreciating. So here's an example. If you buy a property, right? Every year you can depreciate a certain amount of it, but after a certain period of time, even though you can't depreciate anymore, that asset is still there and it's still worth something, right? So if you took a building, you bought it, after 10 years, you stopped using depreciation on it because the value that you bought it for has already been depreciated. That building is still there and the building itself is still appreciating in value, but you're not having to pay anything on it. So if you look at Amazon is a perfect example of that. So if you look at their net income, it's like, oh, Amazon doesn't make any money. But the minute you go back and you look at how much depreciation that they have, dude, they're just literally taking assets, building on top of it, and depreciating them and using that as an accounting gimmick to not have to pay taxes on it. So what he's saying right now is very important. That's saying, look, I have a rail car that can be used for 40 years, right? But I can depreciate it within the first 5 years and not have to pay taxes on money that I have from my business operations. So like, half of investing, especially when you're at that level, isn't necessarily just about looking at a balance sheet, but also how do you take advantage of the taxes so that you can maximize your profit while not having to show a profit. So as an example, like if you ask Donald Trump, one of the reasons why Donald Trump is never, even though Donald Trump is a billionaire, he's barely ever paid taxes. Why? Because he knows how to game the system with taxes, right? When you're a business, all the stuff that you can write off, all the stuff that you can do, you can make it look like you don't make a single dollar, right? Grant Cardone actually covers this too. Like, hey, I can have a business and I can pay taxes on it, or I could buy a private jet and depreciate the thing. I know business owners right now that buy G-Wagons. You know why? Because there is a certain tax loophole that says if the car that you buy is above a certain weight class, you can actually use it as a business expense and depreciate the asset, even though the asset you're using for personal stuff and all this other shit that's happening. So I think people like us, especially retail investors, they really have to understand how depreciation works, because when people are just looking at like a company and saying, oh, the PE is really high, they don't make any income, like this is probably not a good company. Look at operational cash flows as well, because sometimes the businesses are really good at playing with the accounting to make sure that they're not paying the 20-30% in corporate taxes, and they're taking that money that they're saving by not paying taxes and reinvesting it into their business. Go ahead, Vitaly. Sorry.
I was about to say I'm going to depreciate the Cybertruck when I get it.
Yeah, you can. If it's above the weight class that the government allows for, you can absolutely do that.
That's what my accountant said about the Model X.
Yeah.
I don't know if he's right about the Model X though.
It weighs because it's over the limit. I had to pay, my registration was to the roof because it's over 5,000 pounds.
Oh, I see.
So over 5,000, there's an extra fee for your registration, and then it's in a different class. And he's like, don't worry about it. He's like, it's actually, we can make it work for you.
Okay, that's cool.
All right,
so let's get the monthly payment lower, or
do we want to keep playing? We're at an hour. Do we want to do questions, or do we want to keep playing this? Or
let's keep playing this.
It's such a good video that people, definitely maybe play the end of it.
Play the end of it, and then if there's any questions until it's done,
you guys can start putting questions in the chat.
Well, just to set it up, basically, he talks about because this is important. He does talk about buying a company and then going to Manhattan. Why they have 12 floors? I don't know if you want to play that first, because that's an important part.
Yeah.
So why do they have 12 floors of people?
Yeah. Here we go. Let me just play that part.
That makes the real cars. Don't go, Mr. Icahn. Don't go.
Go back a little bit. Go back.
Why should I 30 seconds. Understand what they do? So they said, Mr.
Go back
Icahn,
a
take the 12th floor. We go to
see.
okay,
Let's just play where it was.
Hold on. In other words, you can depreciate the rail car over 5, 6, 7 years, but you can keep it for 40 years. So you get this great depreciation. So it's great tax incentive. So the secret is you got to make money, though, to use the tax benefits, right? So these guys kept buying companies, and every company they bought, they lost money. So that's what was the real problem. So now I go, and they got 12 floors on 3rd Avenue when real estate was pretty good. I was early age. And I say, okay, you're the guys that lease the rail cars. You're the guys that do all the darn work. And that's a true story, and it's sort of amazing, but it still applies a lot to today. Maybe not as much. Well, pretty much as much. You're gonna listen to this. It's hard to believe, I know. So I go in, and I'm a good math guy, I was a good numbers guy, I was a good poker player. I'm gonna go understand what they do. So they said, Mr. Icahn, go to the 12th floor. We go to the 12th floor, and I write a yellow pad, and they're trying to explain it, and you do this, and these guys do this, these guys do that. I go to the 7th floor, new guy, spend the whole day, go home, take a look at my yellow pad. I can't figure out what the hell they do. So I go back the next day, and the 7th floor, 9th floor, 8th floor, boom, boom, boom. And I say, I'm not an idiot. I can't figure out what the hell they do. It's like razzle dazzle. This guy does that. And I start asking, well, what do you need him to do that? Oh, this is very arcane stuff. You're not going to understand it. I say, okay, fine. So finally I say to him, I'm going to St. Louis. I want to see the guy who's the COO. I want to see the guy that manages the stuff, that makes the rail cars. Don't go, Mr. Icahn, don't go. So I say, well, why shouldn't I go? He said, they're scared of you. I said, what do you mean scared? What did I do? He said, nah, they depend on us. They depend on us, and we tell them what to do, and they're very worried that you might do something with us. I said, well, I'm not threatening to do anything, but I'd like to see it. But don't go. So I go back, 8th floor, 9th floor, 7th floor, boom, 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 go back home, can't figure out what the hell's going on. So I said, screw these guys. So I called the guy, his name is Joe, in St. Louis. I said, look, Joe, I want to come see you. See, of course, Mr. Icahn, I'd love to see you. I said, do me a favor, don't tell the CEO I'm coming. I just want to come myself and talk to you, but don't get nervous about anything. He said, why should I be nervous? I said, you're right. This guy, Joe, is like a John Wayne character. He was a captain in the Marines, a tough guy. I was scared of him. And I'm sitting there looking at him, we're talking and we're laughing, and he's showing me stuff. I understand what he does. He goes, this, that, boom, boom, boom. So I said, I want to have a drink with you. So we go out and have a drink. And we're sitting there having a martini, the two of us. I said, Joe, I want to ask you something. I don't want you to think that I intend to do anything, because I don't want you to be nervous. He goes, why should I be nervous? I said, I just want to tell you, I wouldn't know how many of those guys in New York you need to support your operation here, because I honestly can't figure out what they do. And he says, I'll tell you what you should do. I'll tell you how many supports I need. I need minus 30. So I go and I say, Joe, what the hell does that mean, minus 30? Because you don't have the balls to do what I'll tell you to do, just like that. I said, what's that? Get rid of all of them tomorrow. Get rid of all of them. And I'll need 30 people less that have to support them with the numbers that they don't need from me. So I go and I say, hey, it's unbelievable. I can't believe this. Now, today, I would have done it immediately, got rid of the whole bunch of 12 floors. But then I still was wondering, maybe this guy Joe's a little crazy. How could I get rid of 12 floors of people? So I figured, how do I do that? And meanwhile, I knew the guy who owned the building. And he says, Carl, I could use the lease if you get out. And I don't think these people do anything. I watch them. And I said, bullshit, he's a real estate guy. What the hell does he know? So I now go and I figure, what the hell do I do? So there's a consultant around. And, consultants are okay sometimes, not too often, but sometimes. But I brought these guys in, nice guys, Columbia University at those days, and they were the great leasing experts of the world. Leasing, they do this for all these companies. I call them in, 3 guys come in, and one is a professor at Columbia, and he says, Mr. Icahn, we understand your problem. Very arcane. I said, yeah, I heard that word before. Really arcane. So I say, I want to know what they do. Don't worry about it. 3 weeks, we'll be back. It's $250,000. I said, okay, I'll pay you $250,000. Come back in 3 weeks. They come back in 3 weeks. Now, this is sort of hard to believe, but it typifies America, but people don't believe it. Comes back in 3 weeks with book like this, big book, boom, 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 yellow graphs, red graphs, green graph. I say, hey, I ain't gonna read this book. I said, and I'm colorblind anyway. So I say, all I want you to do, here's a yellow pad. I did very well in school. I'm a numbers guy. Tell me what they do. And I said, here's your $250,000. And I give it to him. And he looks at me, he smiles. He says, you know something? You've been square with us, Mr. Icahn. You seem like a good guy. So I'm going to tell you something. We don't know what they do either. I'm not joking. I am not joking.
That's hilarious.
But here's the funniest thing. I mean, it's really sort of funny. I said,
People are saying he's
"Screw
not a good storyteller. This is a great story.
You know, he comes over. He said, great, do it. I gave him their severance. Nobody was mad. Got rid of the whole 12 floors. Sold the lease for $10 million. That was a lot then. And if you shut down a grocery store, let's say you bought a grocery store and shut it down, you'd hear from somebody. You know, somebody didn't get the apples right. You know, the pears were rotten or something. If you had a flower shot, the roses wilted. It was like out of a science fiction movie. It's like they never existed. I never got a letter.
I agree. I would love to see a real Carl Icahn movie.
It was like one of those bombs.
All right, we want to take it down now.
Just hit the thing and, you know.
So we have a guest who is here for the first time ever backstage. Welcome, Mr. Futbucker.
What? No, we need an image. I'm sorry.
Nick.
There is a Futt
Nick
right there.
Futt. Is that his last name?
Well, so you could use my real name.
Nick
No,
Futt.
we gotta see your face too. This is if you're gonna.
No, it's fine, dude. Nah, it's fine, dude. You want to keep
Yeah, you don't have to. It's up to you.
pretty face.
Oh, by the way, Nick, you're here with us for the 5th day in a row, ladies and gentlemen. 300.
This guy's a 307. Yeah.
By the way, I
We
ordered
did
a
it
gong.
5 days in a row. We got it. Nick, you're here with. All right, Nick, what's up, man? How are you?
Doing all right. Thanks.
Go ahead.
No, I'm just here.
No, I was gonna say, Nick. So what's your take on this whole IEP thing? Because I know that you're actually a lot more educated than most firefighters about all this stuff. So please tell us what's going on.
It's a slap in the face.
No, I mean on IEP, like you said, it's very suspect. You know, once you start kind of, digging into things, and like why would you, only take the dividends in in shares, and it's I don't know, it's very muddled. As taking something like that as a trade with a small allocation, speculative, might not be. But as far as like a buy and hold, I don't know. And yeah, granted, he's connected, this, that, the other thing, whatever else. I mean, the real, I don't know how to phrase it, but everyone was saying the same thing about Sam Bankman-Fried too. Granted, obviously it's completely different, ends of the spectrum, but you don't know, who has what skeletons and what closets and stuff.
Nick, when we were doing the banking discussion, you said you agreed with Chris on a certain point. You want to bring up that point, and Chris can piggyback off that.
Yeah, so
we should switch Chris and Nick. So at least they look like they're talking to each other, or it looks like there you go, Chris. There you go.
So I mean, the whole banking thing, right? The BTFP that was brought out, and if you dive into like the history of since 2008 and the regulations with banks and what they have to ratios they have to hold, etc. Back when COVID first started, remember they disbanded having to hold a certain amount of reserves. They basically were like, nope, you can literally lend every penny you have. Obviously the money printer was on, but the whole basically the Fed created this monster with the banks right now. And the reason it's they in my opinion they open up the BTFP so fast was because the cascade effect, that potential, as everyone starts to dive into everyone's filings and who has what treasuries hold to maturity, and everyone starts diving into all these ratios, right? And it's funny because the whole banning short selling on banks, I was talking with my friend on Wednesday, and I'm like, dude, this is in the next week, that if the sell-off continues like this, it's again, because how do you stop these banks from cratering? And like you're saying, the stock price has nothing to do with the bank's balance sheets, with having reserves. But like you said, people see the number on the screen and they think, okay, well, if the bank
they're in trouble.
Let's say they're in trouble. Now they have minimal ways to raise capital because the stock has been crushed.
Yeah.
And that, like essentially it's just like that contagion risk that just unfolds.
They could just call up Uncle Chris and ask for a loan.
Yeah.
You know,
Okay.
Chris
I
can-
have a question. Nick, I'm sorry. I have to call you Futt because Nick, I don't know who this guy Nick is.
I gotta call you Bucker.
I gotta-
My question is, are you an anomaly among people in your field, among firefighters? Is this something that, are you like one of the few guys that does that understands markets and invests on this level, or is this something that's just ubiquitous among you guys?
You'd be very surprised how many nurses, doctors, lawyers. I mean, you can go through the list of Wall Street guys that are now firemen. That was their career was previously big time professional.
Oh, you're saying they went the other way. That
Yeah,
now
yep.
firemen coming from that. It's interesting. That's really
Interesting.
interesting. I did not
Yeah.
know that.
Well, I mean, like if you look into, you go into, follow anything, post 9/11, et cetera, like the amount of guys that have, like I'm third generation since when I'm fourth generation since like 1892 or something. So it doesn't really matter like professionally, like a lot of guys, you might have started off, in down one career path, but you took the civil service test when you were 18 and then you got called, 10 years later when, you're 27, 28, you're like, yep, I'm going to do that.
Yeah. Well, I used to work. I did a lot of work in the blue collar industry in New York at that time. It was like right before 9/11, and I don't remember talking with a lot of those guys about things like this. So it's curious that you're this involved in markets.
Yeah,
I
think
think invested and knowledgeable about it. So, like, is this something that you talk about with fellow firefighters? And I don't mean the ones that came from other industries, but I mean just by and large, would you say that a lot of the blue collar people in New York now are as savvy investors?
I mean, no, I mean, there's, a lot, as with, so many, people started getting more, interested and involved, so to speak, obviously with COVID.
Yeah.
But in terms of like, like real term, like I try and, help guys out with, there's a lot of information out there and it's difficult to disseminate through a lot of information. It's like information overload. So a lot of people, try and do their best to, learn things and figure things out. But there's the learning curve is steep and tuition can cost you a lot.
But you're constantly like you're day trading, right? Like you are constantly in and out of certain positions, correct?
Yeah.
Okay. So so while you're a firefighter, how do you make time for that? Do you just always have your phone with you and you're doing stuff, or like, I guess, how do you manage both?
Oh, well, that's at work. Sometimes I'll be like, if we're, we have downtime, whatever, like the life of a fireman, right? We have like duties throughout the day, training, cleaning up and, our day-to-day duties. Sometimes when I'm at work, I'll, if we have a bit of a, slower day and there's some opportunities and I'm, in tune to what's going on, watching, certain stocks, then, I might take a few trade. Usually I'll trade futures at work because then I can also switch over easily mobile with that.
So
and then,
humble brag right now. What was your big hit? You're like, yo, I called this and it did this and I made this. Let's go. Fill in the blank.
My best day trade.
Come on, MJ.
Do you remember when
Rainbow?
do you remember when Tesla, the guy allegedly whoever crashed, but they were in the back seat, whatever, they burned and died. It's like a year and a half ago.
Yeah.
Oh wait, the guy of the FSB
they hit a tree. They hit a tree
or something.
Yep, I shorted Tesla at the open with like I don't even know a lot of contracts of that weekly. I made like 15 grand in like 20 minutes.
Wow.
Damn. Okay. Damn, that
is a lot of money.
So he's actually a Wall Street.
That's like a jiggle of the cowbell, like not a full ring, but maybe like a little ding, ding, ding. All right, there you go.
But you know what? On the flip side, see when you talk like short term, swing trading, day trading, whatever else. What most people don't talk about is your. Have you ever heard of risk of ruin?
Mm-hmm.
So, like, let's say I was trading that position. If you're like, let's say you have, $100,000 account, right? That position that you're taking on a day trade shouldn't be more than 1%.
Oh yeah.
So the problem is people that look into this, right? Oh, I want to trade this, that, the other thing, great, whatever, right? They get into it and then they oversize. They don't cut when they should. Like why are you still in the trade? Like the trade's not valid. Like I trade price action, right? So, once the trade is now invalidated, like you stop out.
Yeah.
When people don't do that, then they just keep throwing good money into bad money. And,
sunken cost fallacy. Yeah, you get caught on sunken cost fallacy.
And then it's just like, wow, how did I just lose 10 grand? Like it's. I mean,
Wait, are you saying you have a story? Are you saying you have a story about that?
I could go. I have stories of biggest misses. Literally like stop losses being. So I'll give you my biggest miss. I had. Jeez, I can even go back and show screenshots. So sad.
It's probably you're bringing up scars right now. I can hear it in his voice.
But you're telling me you don't have those too? Where you screenshots of those mega losses? You're like, fucking hell,
bro! I have that money. I have bankruptcy filings, not for me, but the company that I invested in with my name as a fucking creditor. That's how. That's when you know that's when you were in. Yeah, you were like the last one out. So anyone that gives me shit about, oh my god, Chris is a fucking trader. He doesn't buy and hold, motherfucker. I held to bankruptcy. All right,
you were up like 600%.
That is the level of balls that I had back then. And
you know how many notices I have piling up of all those bankrupt companies that I have to sue?
Dude, I've been on multiple creditor committees. You guys trust me.
Do you guys get those mailers? Do you actually respond and try to get your money back from these people?
Because
does anyone do this?
No.
You mean the proxy bullshit with the law firms that are like ambulance chasers, fucking trying to say that, like, anytime the stocks drop, it's like the fucking lawyers come out of the woodwork. Oh, we're gonna go after the company, but most of the time they're just trying to. Most of the time they're trying to do is just get the fucking settlements out of it and using your pain as their what is that, leverage.
I did it once. By the way, I did this once. This was a long time ago, and I didn't do it ever again because I think I got a check for 18 cents. And I was like, there's never again am I filling out one of those forms.
Yeah,
it's not worth the paper it's printed on.
Fudd, are you bullish on Palantir? Do you have a long position on them?
Oh yeah.
What's your case? Yeah, I gotta hear this, man. What's your bull case?
My bull case. My trading guru that I've learned a ton from. I've shared him a bit on Twitter. My buddy Jason. He's a Silicon Valley guy.
Jason Calacanis. Nice.
No.
What a name drop.
But he's he's been involved with like Cloudflare, Hood, Uber. A lot of them were his clients, and had some dealings with a couple of IPOs. He's a very he basically at, I want to say $125. He was like, you should buy Enphase. So
when it was 125,
you'll appreciate that. Yeah, it was like 128, 130.
That's a very smart man, by the way.
Yeah. Well, he knows people. So anyhow, he we were talking. It's like a trading investing group. I'm in with them, and basically one of his friends who's friend of a friend, et cetera else. He was like, yeah, he's like anything under $7. He's like, if you're buying and holding long term, he's like, I don't think you'll regret it. He's the kind of guy that you don't follow blindly, but obviously all the DD and
over the years,
bro. All the DD is bullshit. I've gotten the best picks at things at like bars, at strip clubs, stuff like that. Like places of seedy operations is where you get the best advice. That is the best areas to get advice, man, because people let out their true selves. They're inebriated, so they're like, oh, so especially if you live in New York City, bro, go to the bars like Patty Buchanan's. Just go, enjoy yourselves, hang out with these Wall Street guys, and they'll give you some of the inside loops.
Yeah, but you hang out downtown,
things that are coming.
The bars downtown.
Yeah. And it could be something as simple as, hey, you know what? This new IPO, I think it's about to drop. X, Y, and Z. The valuation is, you know, they're not going to give you like real insider information, but they'll point you in the right direction, which is the key thing,
And-
you know?
And what's funny about that, Chris, is that's not. There's nothing illegal about that.
Yeah.
Yeah.
Like, people think
So hold on, you left the topic, but did you buy Enphase at 125?
I did. I sold too early though, but that's all right.
Okay, there you go. Next time you know to hold.
I'm hoping it makes its way back down there.
It might. It might.
Yeah. Hang out with us less. Go to the strip clubs more. Ask the strippers. It's like, hey, what should I buy?
The strippers. Oh my god,
Dude.
No, but if you
know
do,
what
if you
they-
hang out downtown, my
Yeah.
aunt used to work for a lawyer that was down there, so we go to. I'd meet her sometimes down there for lunch or for dinner, and you'd hear stuff, and then the older like lawyers, you hear them talking.
All right. Arlie says Chris gets his DD from hookers. Is this true,
Yeah.
Chris?
Chris
Listen,
DD
as,
Wolf of Wall Street is loosely based on his life.
just remember, guys, strippers are all cash rich, and what was it? Yeah, they're just cash rich, bro.
Bro, I've never
They-
been to a strip club. Still, I've never done it.
What?
Yep.
We
I
talked
know,
about this
man.
on the, we
Kidding.
talked about this on the
Oh my
chat.
god. Okay, so
One
we
night.
have to
What's
do a
your favorite
finance
strip club?
junkie strip club.
What's your
We're going to
favorite
Vegas.
strip
We're
club
gonna
in
go
New
to
York?
Vegas.
Hustler Club. What's your favorite strip club in New York?
In New York, me?
No, all you guys. For me, it was Wiggles when it was still around.
I've also
back
never
then.
been at a strip
Wiggles
club,
gone.
so there you go.
What?
You went to this.
Solid.
Wait, hold on. Wait, so Vitaly, hold on. You were making fun of me.
I'm just
You were the
first of all,
same.
fucking with you.
Okay, the second
That's
time,
one.
that's called a joke where he says something.
This guy, man, he still doesn't
I'm
get
pretty
me.
sure
It's
that-
crazy.
I'm pretty sure the producer wife is like giving him the look. Like right
Right,
now, it's like,
she's right off camera. Right here.
yeah.
hand
Tell her to
comes
come
in
on
and just
camera one
smacks
day. Tell her to come say hi to us one day. We got to see producer wife.
Yeah.
You got to say what's up. You
No,
got to
that's
like.
all right. That's all right. I
smack
don't need
you
the
in front
internet. I googling her, you know.
What was I about to say? Oh, Chris, you went to a club named Wiggles.
Yeah, man. It was in Queens.
in
It
Queens.
Wiggles.
Just a little bit.
was a mob joint. You know,
All right.
this is like back in the day, man. What? Don't be looking at me. Get out of here.
Wolf, dude, I'm buying puts on Chris right now.
Wait, Chris, does your
Shit.
producer
He's
wife
like,
also watch?
motherfucker, I'm still in SLG. You didn't tell me. She's like,
His
you're
wife
not getting
looking at
anything
him saying, I
tonight.
sold that
Yeah.
SLG. She's looking at her
So,
portfolio on Robinhood.
so this is a little bit off topic, but whatever. I'm known as Chris, the off-topic guy at this point, so it's okay. So me and the wife, we were in Greenville, South Carolina last week, and the comedian was just freaking hilarious. And one of the things he said, you know, during COVID, people don't realize that like strip clubs in New York and Atlanta were still all open. Right. The only difference was that they all had fucking masks on while they were doing their stripping.
Oh,
The
shit.
It's gotta
entire
be like
time.
walking
And
into
the-
Mortal Kombat.
And
Fucking
Atlanta
Melina.
was like, and the strip clubs were like essential businesses, believe it or not.
Yeah,
What?
yeah. You remember how they did it in Vegas? They did like the drive-through strip club. Did you see that? Like you drive up in your car and they were behind a glass, or so like the old school peep shows in Manhattan. You put a quarter in and you can see like a boob. Let the door
Oh
closes.
man,
Have you ever almost fallen in love with a stripper?
No.
no.
Who's gonna
No?
fall in love? No.
That's
No.
not fun.
You say that like that's your fear
Okay.
for not going.
No, I'm just asking. I heard
They
you-
provide a service. That's it.
Yeah,
That's
dude.
all
All right,
there
admit
is,
it's
bro.
10:30. We answering questions. What's
I
going
almost
on?
did.
Yeah.
Do we have any questions? We don't have that many. Hold on, let me see.
All right.
Well, I was gonna say someone mentioned lucid earnings.
They just said
and,
Palantir earnings and lucid earnings. Yeah.
and
that's it.
Palantir earnings. So why don't you get into Palantir earnings? I mean, that's
I mean,
it
look,
was a great
Palantir. I
video,
don't-
by the way. Everyone, give it a thumbs up if you liked his video this
Yeah,
morning.
watch my video.
Palantir-
When he went outside and you got Poison Ivy for that video, didn't you?
Was
Yo,
Palantir
someone
gap
commented-
profitable?
Someone commented you're gonna have poison ivy, and as soon as I was reading that, I started scratching. I was like, "Yo, they're right," but obviously I don't have poison ivy. Look, I think they'll be gap profitable, and revenue will beat a little bit, maybe $1 million, $2 million, probably $5 or $6 million, and the stock might go up like 10%, maybe then get sold off or go 10% down. I really have no idea what
Keep
happened
them
to the
on
stock.
track for S&P inclusion.
Yeah.
By the
but
way,
they just have to
guys,
keep being
FUT
profitable.
is super bullish on Enovix. I don't know if you guys know that.
No, I didn't know that.
I didn't
Yeah.
know that.
Mr. Firefighter, I'm sure you can explain to us why, but one of the things is like the number of battery fires in because he's a firefighter, he could tell us the number of battery fires.
I
which
like
is
how
very
quickly Chris
interesting.
left Palantir. I enjoy this new Chris.
No, I mean, Fuddbucker, so what you being a firefighter, you have experience with these batteries, and what's one of the most single challenges with batteries that enables Enovix to be a big company in the future, because they actually can bridge a need rather than just, go with the standard thing that's out there right now.
So the whole thing, so Enovix, if they're, I mean, I don't, have like the tremendous, in terms of, the batteries that they're producing and whatnot, but in terms of if they can address the proper markets and solve the whole thermal runaway situation, because the amount of like the e-bikes, scooters, whatever else, it is mind-blowing. Like I would say right now, probably 40% of all of our fire duty, if maybe it might even be more right now, is due to the e-bikes. They're just charging whatever else, and once the thermal runaway goes, I mean, it is like, talk about pouring like fuel on a fire. It's literally like a flicker, and I mean, you can whatever, you could search YouTube for it. You can actually FTNY Twitter tweets. It was recently in the back of a bodega, and literally you saw like a little flicker, little flame, and then within about 15 seconds, the entire room was fully engulfed, and like it reacts like nothing.
It was the magnesium, right?
Isn't
Manganese or magnesium in there?
Magnesium
reacts to the water.
Magnesium, that stuff burns. That's like that.
That's really hot.
Glows white, and you can't really actually put it out with fire. I mean, we just with water, we just douse as much as you can. Eventually goes out, but you're really not, because it's a chemical, kind of like a chemical reaction at that point. But I mean, basically, like, we just try and, I mean, it's kind of ridiculous. Like, we're like if it's like because people charge them in their apartments and stuff, we'll like try and fill up the bathtub and like drop them in, because you can't like put them out. It's crazy how fast they just engulf rooms, and it's nuts. And I mean, like the other day I was at work, I think in the one a day tour, which is 9 hours, 9 a.m. to 6 p.m. I think we had, in just the borough of Queens, we had 5.
That's crazy. That's crazy.
Well, my follow-up question would be: Do you think that it's time to have some sort of an additive because obviously water is not sufficient to put out that type of a fire? So, do you think that there's some sort of additive that they could do that could actually suffocate that fire and deprive it of what it needs to ignite? Because water's not doing it.
So, I mean, there's
magnesium burns into water. Primordial. You could throw magnesium on water and it would explode.
Yeah. So basically, it's like, majority of our job is like, all right, here's the situation, figure it out. So we adapt and overcome. Kind of like a tagline for us. Just get the job done. But there are, like, we have so that kind of stuff is spearheaded by, we have a hazmat unit and the FDNY, and they're coordinating with a bunch of the other big cities in the country that are also dealing with this, trying to like put their heads together in terms of because obviously there's really no like private sector for like fire suppression, so to speak. So,
but is there something that they could put? Is there something that they could have on the truck that you could mix in with the water as it comes out?
I mean, we have different kind of foams, stuff like that, but
like
none of that is. It's, as of now, it's like impervious. It just laughs at us.
Yeah. So I think this is the great thing about investing that I love, where there are challenges that we don't see normally day to day. We just think, oh, look, e-bikes, they're great. Everyone loves them. But then there are challenges that comes with moving towards an all electrical future.
Yeah.
And the thing is, there are companies out there that are on the sidelines that could honestly provide a huge potential that, like, unless you speak to someone who's an industry insider, like, I had no idea that there was an issue, such a big issue with e-bikes and bikes and stuff like that, this thermal runaway thing. But you're speaking to someone who actually deals with this on a day-to-day basis. So you know that this is a problem, not just in small localities, but everywhere. Like New York City, whatever problems they have, they're probably going to have the same problems in LA, all around the country, and maybe even around the world. So there is a definite demand for a product like Enovix, where if they're able to change the paradigm on how batteries are made, because they exclusively own the technology. And you guys saw the demonstration that TJ Rogers did, the one where they're actually penetrating the battery and nothing was happening. The thermal runaway thing was fixed. I mean, if they can figure out how to scale the shit out of that battery, bro, they are going to be a much, much bigger company than what they are today. I mean, they haven't even, you're muted, Vitaly.
Can we table the whole Enovix thing? That's a whole discussion, honestly. If
Yeah,
you want
we
to talk
gotta
about,
have that in different
if you want to talk about Enovix, that's more than a
Yeah, that's
5-second
big one, yeah.
discussion here. So
no, even while he was talking, there's a whole. Speaking of that, there's a whole other things too. With the transition to EVs, that it's not all.
Well, so either we end it or we answer questions. What do you guys want to do?
No, we're good. It's hour 30.
I would just add my PSA for that. If you are someone who likes, e-bike or like the pedal bikes, right, that are battery powered or battery assisted, don't buy cheap Chinese ones. Those are the ones that
don't get them from Wish.
All the ones that are going on fire. Spend the money and get like a legit brand. Don't be buying it on Amazon or.
I'm glad you're telling me now, because I have two sitting in my garage right now, so I'm gonna have to go put them outside.
And and honest to God, charge them outside and under supervision. Like if you have those, because that's just like you plug them in, think all right, you go about your business. Next thing you know, you're like, oh, my shed's on fire.
Yeah, I agree.
So
I know a few friends of mine about a year ago. What they were doing was they were
all right, Chris.
No, I'm just saying they had a whole bunch of
guys
like
exchange
scooters.
numbers. That's all I gotta say for you.
Yeah.
Some of us have.
All right. Thank you everybody for joining. We'll be back for our round of podcasts weekly starting tomorrow up until Thursday. Thank you, Fut, for joining. Finally, it was great to see you. Your voice is deeper than I thought. I didn't think your voice.
My pool is burning down right now as you guys talk about this nonsense, as Johnny said.
All right. Yeah, we'll be back Monday. We got earnings tomorrow for Palantir, so we'll discuss that. We got a bunch of other companies, and there's still a big earnings week. A lot of stocks, Robinhood, tons of companies. So another big week of earnings.
Thanks for coming on, Fut.
Thanks for coming on, Fut.
We'll see you out in the interwebs.
Later.
Bye.
Good night, everybody. Bye-bye.